Ladies and gentlemen, good day and welcome to the NATCO Pharma Q4 FY22 conference call hosted by Edelweiss Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your stone phone. I now hand the conference over to Mr. Kunal Randeria from Edelweiss Securities Limited. Thank you and over to you, sir.
Thank you, Diksha, and good morning, everyone. On behalf of Edelweiss Securities, I welcome you all for NATCO Pharma's Q4 FY22 earnings call. With us, we have NATCO Pharma senior management represented by Mr. Rajeev Nannapaneni, Director and Chief Executive Officer, and Mr. Rajesh Chebiyam, Executive Vice President, Crop Health Sciences. So over to you, Rajesh, for opening remarks.
Right. Thank you, Kunal. Good morning and welcome everyone to NATCO's conference call discussing our earnings results for the fourth quarter of FY22 and for the full year, which ended March 31st, 2022. During this call, we may be making certain forward-looking statements or statements about future events, and anything said on this call which reflects our outlook for the future must be reviewed in conjunction with the risks that the company faces. I would like to state that the material of the call, except for the participant questions, is the property of NATCO, cannot be recorded or rebroadcast without NATCO's express written permission. It will begin the call with a results highlight and then followed by an interactive Q&A session. So we hope you received the financials and the press release that was sent out earlier. They're also available on our website. Briefly, the NATCO has recorded consolidated total revenue of 2,043.8 crores for the year ended March 31st, 22, as against 2,155.7 crores for the last year. The net profit for the period on a consolidated basis was 170 crores as against 442 crores last year. The reduction in the profit was primarily due to inventory value write-off and provision of receivables related to COVID products, with inventory value write-off of approximately 232 crores and provisions of 46 crores towards estimated credit loss. Export business performed well during the quarter, driven by lenalidomide sales and profits. For the fourth quarter, which ended 31st March 22, the company recorded a net revenue of 610.6 crores on a consolidated basis, as against 359.7 crore during Q4 of last year. There was a loss for the fourth quarter period on a consolidated basis of 50.5 crores, again primarily due to the inventory value write-off and provision of estimated credit losses, as against a profit in the prior year of 53 crores for the same quarter. Company is confident of strong business growth during the upcoming year, led by export business of lenalidomide and growth in other business segments. The revenue split has already been shared, so now we will open up for a Q&A session and take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We take the first question from the line of Mr. Amey Chalke from Haitong Securities. Please go ahead, sir.
Yes, thank you so much for giving me opportunity. So I have two questions. First is on Revlimid. Would it be possible for you to share how much months of sales have been recognized for Revlimid in Q4? And also, after launching this product, what is your sense now on the price erosion side, like compared to the open market where there is no market share gap? If you compare with that, the price erosion is on the higher side or it is on lower side. If you can comment on that? And also the last on the Revlimid, when do you expect to launch the remaining 2 strengths of Revlimid where we don't have exclusivity?
I think in terms of Revlimid pricing, I've had a conversation with Teva on this. I think Teva doesn't want to reveal the pricing strategy, so I will not give any comment on the pricing. Okay. And the second question is on the amount of stock that we have sold. I think majority of the stock has not been sold. The exact percentage I'm not able to recall at the top of my head, but I think most of the stock will be sold in the next financial year. We have just had it's only 1 month of launch. So I think I would say about 70 to 75% of the stock will be sold in the financial year 23. I think that's our estimation. Okay.
Yeah. And when do you expect to launch the remaining 2 strengths?
The 2 strengths will be, I think my understanding is, again, I stand to be corrected. I think my understanding is that Reddy's has first to file. I was going with what's there in the public domain. So I think after Reddy's launch, whenever that happens.
Sure. And the last question on the India business, or the remaining core business which we have, which has been substantially eroded over last 1 or 2 years. What has been the key issue? Have our oncology treatments where we used to have product portfolio, is treatment shifted from those product lines to the newer product lines, or have we lost market share in these products?
I think, as you know, our focus, oncology obviously represents a significant part of our revenue. And I think growth in oncology has not been coming because of our high base and price erosion that we have seen in that portfolio. And again, we are not spread out in multiple segments. I think we are spread out a little bit in gastro and a little bit in cardio. Those segments have done well with specialists. So we've done reasonably well with specialists. And this quarter, you've seen a higher decline, partly because we've taken a sale reversal on some of the COVID products. I think the bet that we made on COVID has not worked. And I think if you look at the money that we have made over the last 2 years and look at the write-off more or less, I think on a net basis, we've not really made any money. Yeah, I think it's been a disaster, but it is what it is. I think it's a business bet that we have made and it hasn't worked. The domestic itself, my sense is, I think if you remove out the reversals and all that stuff, I think it's about a 400 crore business, I think, give or take. I think that's how the base business is at. It's stable. I will not say it's growing or degrowing. I think these are all one-time entries that we had to make. What do I see for the future? I think our base business will grow, and I think at this time, I think our target is about 10 to 12% is what we're going to grow in the next year. I think that's our expectation. The limitation that we have in domestic is obviously, we don't have coverage outside the core specialty areas. So recently we started a division to cover the general physicians and all, but that will take some time to the uptake to happen. Or 2, I think, as I said, we had to look at an acquisition. So we're looking at that as well, but I think we have to find something. At this time, we don't have it. Yeah? Thank you.
Next question. Thank you so much. Yeah.
Thank you. We take the next question from the line of Mr. Ahmed M. from Unifi Capital. Please go ahead.
Thank you for the opportunity. My question was regarding the inventory write-off. So is it fair to assume that whatever write-off we needed to take has been done in Q4 and there won't be anything remaining for next financial year?
Okay. Ahmed, whatever write-off that is there, we have taken. I think we've taken for slow-moving inventory and COVID primarily. I think COVID being the majority of it, but I think more or less we made an assessment of the stock and we've done it. The only inventory, I'll not use the word risk, but okay, I think I have to use the word risk, is on the agro inventory. So we have an agro inventory and supplier commitments and about 85 crores in that region. So if there is, as you know, we've been sued on the process patent. I think that was completely unexpected, but we have to deal with it. So we believe that we are not infringing, and so again, if the next date of hearing is in July and the patent expires in August, the compound, So which is when we were looking to launch products. So if everything goes well with the court case and we get clarity on it, I think we can liquidate our stock. But also because of the process patent litigation, it actually interestingly presents a very interesting opportunity because there aren't too many people who are aggressively pursuing it. And I think if we win this case and get clarity on it, I think we'll have an exclusive or a semi-exclusive situation, which actually will bode well for our shareholders. But again, we need to have clarity on where we are, and I think that's a risk that you're running on the inventory over and above what is already stated, to answer your question. Okay?
Got it. Now, this question on the Copaxone, so there is some erosion which is visible. So are we holding on to a market share? What is your any qualitative comments on Copaxone? How does it look?
Our Copaxone market share is doing well, my friend. Top of my head, I don't remember what the number is. I think we're doing 40% is what I recollect, but top of my head, I don't recollect. We've been stable and we're doing well. But overall, as you know, there has been some of the market has moved to the orals. I mean, dimethyl fumarate and other orals are there. So I think there's a general reduction in the slight reduction in the market size. But overall, as per the generic version, on the generic, I think we're doing extremely well in that product.
Got it. Just last question on the Revlimid. So there will be two components, right? One, the inventory will transfer from our balance sheet to Teva's balance sheet, and second will be the profit share that will be accrued to us. So in the current quarter, is the entire inventory which we are supposed to sell to Teva at cost or whatever pricing, is it accrued on our P&L?
Yes. So basically, we have already given them the stock in the December quarter. So that is already done. So what we have accrued in this quarter is only the profit share.
Okay. So is it possible to share the amount?
Teva doesn't want us to share. I think the Teva is very particular that they don't want us to discuss anything about the pricing strategy and the profit share amounts. Yeah.
Okay. Got it. Thank you so much. Thank you.
For strategic reasons. Yeah. Okay. Thank you. Next question, please.
Thank you. We take the next question from the line of Mr. Viraj Kacharia from Securities Investment Management. Please go ahead.
Yeah, hi. Just 2-3 questions. You said the normalized sales in domestic business is around 400 crores. But the normalized sales in the rest of the business, how much would that be? And, related question is, we used to want a kind of quite healthy operating margin in the domestic business, say upwards of 20-25% or how has that moved given the kind of price erosion, competition which has seen in the domestic business in last 1-2 years? So that is one. Second is on the CTPR, the innovator has tied up with the Indian company and for contract matching in global pay, and they are looking at this as a more of a $4 to $5 billion opportunity. So for us, if there is a kind of a positive ruling, how are we looking to play this? Any update in the status and our play we can get? And third is for the Revlimid part, if you can retaliate.
One second, I'll try to answer. You asked me so many, I'm losing track. So let me answer 2 questions at a time. So let me start with your CTPR question. What other people are doing in contract manufacturing and all, I think, they're probably part of the global supply chain for the innovator, and that's why they're getting an upside. That's not my business. Yeah, our business is to challenge patents and to give an affordable product. I think that's what we're looking at. The opportunity, as I articulated earlier, is there, and I think it's a very interesting opportunity because of the litigation and the patent landmine that is there. If you're able to clear the way, I think it's a very interesting opportunity. I'm very excited about the opportunity, and subject to how the court case goes, I think we can give clarity on how we're going to do with that product. Okay, that's to answer your first question. The second, what was the very early question that you asked? If I can refresh about the base Revlimid, or you asked about the base business, right? What did you ask?
From the base business, X of domestic, what is the normalized run rate? And in terms of margin structure in the domestic business, how would that
margins? See, my margins are always good. I mean, if you look at our rep yield, we have almost an 8 to 10 lakh yield per man. I think we look at we have one of the best in the industry. This is after hiring. Actually, our yield is even much higher. It's like almost 15 to 17 lakhs because we hired a Me Too division where we started covering GP. That's the reason why the yield per man is reduced. So in terms of margins and all, I think it's a very stable, good business. I think the challenge with our NATCO's business has been that it has not grown and been stuck. And I think we had a COVID pop, which increased the domestic. We touched nearly 500 this year. But if you remove the COVID products, I think, as I said, it's around 400 or in that region. Okay. So that's the answer on the base business of domestic. Anything else you wanted to ask me? I'm sorry.
Yeah, the base business X of domestic, what is the normalized run rate? And
I think, again, I don't want to give away too much on revenue limits. I think I'm trying to avoid that question. But I think you look at the business this way, okay? Our general ad, if there was no revenue limit, for example, would have been about 50 to 60 crores. And what you're getting addition on revenue limit is what we're getting. And we had to remove, maybe if you're doing some extra R&D, then we can remove that out of the EBITDA. But that's how you should think of it. I think our core business does about little less than 300 crores, I would say. And then everything we get on the top is from there. And remove if you do some extra R&D or do some extra R&D spend because of the cash flow. That's how you want to think of it. Yeah.
Last, if I can squeeze in, on revenue, if you can reiterate, what is the profit share? Is it like 50% or 1/3?
No, it's 1/3, my friend. I think it's 30% if I remember. Yeah, 30% is what it is.
Thank you.
Thanks. Next question, please.
Thank you. We take the next question from the line of Kunal Dashmesha from Macquarie Capital. Please go ahead.
Yeah, thank you for the opportunity. So just on the Revlimid, why would it be the case that the inventory would not be moving very fast? Because it is the REMS program is of innovator and he has been able to control the generic movement. Is that the way to understand?
Is your question why we didn't sell more than what we sold? Is that the question?
Yeah. So why we didn't sell the entire
We will sell. I think we're going to sell a good portion in the Q1 of this year, and there'll be some portion in Q2 and Q3 a little bit. It's just that you just launched it, and then we had to set up the REMS because we're a new product, and it takes a little bit of time. And we only had 1 month of launch, so it just takes. They sold through some, but I think majority of it they'll sell through in the next financial year. I'm not concerned about it. I think we're very comfortable that we're able to liquidate the stock. Yeah.
And in that case, let's say if the second round of generic entry happens, will we have to take the shelf stock adjustment in that case?
Not that I'm aware of, because I think we'll sell through the stock before the other generics will come in. I'm not worried about that. I don't see a challenge on that. And in fact, when the second round of generics come in, we'll also get a higher share than what we have. So we'll have a higher quantity. So we'll also do well. And I think it's a staggered entry for everyone. So I think this will hold on for some time. So I'm very confident that this will be recurring and it will be stable revenue that we'll get in the next few years.
So and the REMS part you said, Teva is setting up it on its own, or we are using the innovator's REMS program?
I think we're using the innovator's REMS, but it's just that setting up the reimbursement and all, there's some logistical issues at the launch time. But I think we have done well. I think I'm not worried about us selling the stock. I think we're very comfortable we're able to liquidate the stock.
Sure. Thank you.
Thanks. Yeah.
Thank you. We take the next question from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Rajeev, two things. One is on Revlimid. You obviously get an annual allocation of your volumes. So is it fair to assume that for us the recognition is going to be evenly spaced out through the quarters for the year, or there is going to be some lumpiness in the way we recognize revenues through the year?
I think my sense is I think I can't speak about future quantities. I'll only speak about what I feel will happen in the next few weeks. So I think we've recognized some portion. I think we'll recognize a good portion in Q1 of 23, and then it'll taper off a little bit in Q2 and Q3. And again, Q4, I think we'll get the new allocation. So I think it'll again, the earnings will bump up in Q4. So this is what my estimation is. Again, we'll see how it plays out. And I think we need to speak to Teva and try to understand what will happen. But if you want to make an expectation, I think that's what I feel will happen. But we'll see how it plays out.
And the new allocations happen in Feb of every month, every year. I mean, till the first time.
Annual increase, no? Every annual, I think, is my understanding. I think that's our understanding. Yes.
And secondly, outside of Revlimid, what are your own sort of focus areas for the business for the next 2 years?
I think I'll look at the positives. I think all the subs are doing very well. I think Brazil is turned profitable. Canada is doing extremely well. We got very good market share in Canada and Revlimid. I think I would say the IMS numbers are not out, but I think what my sales people are saying, I think we got almost 40-50% market share in Canada. So we've done extremely well in Canada. So all of that is reflecting in the numbers. The domestic is stable, and I think in terms of, for us to do well in our base business, I think there are 2-3 things need to happen. I think one is our domestic has to improve, and I think we have to look at doing a couple of strategic initiatives. 2, our agro clarity has to come, which hopefully will get the clarity in the next 2 months, because the August is the impending launch subject to the court clearance. So I think that is probably the 2, I would say, immediate term, things to look forward to. But overall, I think our objective is to build a broad-based, multi-country generic business. I think we're present right now in Brazil, Canada, and India and US. And US also we have a front end now. So these 4 markets will be the core drivers of our earnings. And I think, and in the smaller countries, we're present in Philippines and Singapore. So overall, I think we're very excited, and we had some very good filings this year. I can just articulate what filings we've had. We had 3 FTFs this year. One of them is semaglutide, and another one is aclaibrutinib. Both are, have multiple filers, so that's on those 2 products. And we had another filing, I think, for a product called idalicib. So there we are. It looks like we are the only FTF. So I think we are looking good, and I think our idea is that we're able to build a pipeline, which can sustain over the next 7 to 10 years. I think that's the idea. Yeah.
Okay, thank you.
Thanks.
Thank you. We take the next question from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. I just wanted to know what is this 46 crores of ACL losses that we have booked this year?
I think out of 46, I think we have done general, business credit loss provision you were made. And we had one particular receivable to the government, one of the state governments, that we did COVID supplies, which has not come. And almost 1 year was approaching, I think, and then we made a decision and we should make a provision against that. We're hoping that we'll be able to recover the money, but as prudent accounting, I think we've made a provision against that receipt.
Sure. Fair point, sir. Thank you.
Okay, thanks.
Thank you. We take the next question from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, Rajeev. Firstly, based on some of the comments that you mentioned on the Revlimid, so just wanted some clarification. So what you said that, we transferred our quantity to Teva in December quarter, and whatever we got in Q4 is just the profit share, right? And that would continue in Q1, Q2, and Q3. And then again in Q4, we will get another higher allocation based on whatever is there, and same cycle would repeat over the year. Is that the right understanding?
That's correct. Yes, absolutely. Yes.
Right. And in Q1 you mentioned, and for the Q1 you mentioned the comment that about 70-80% is still left to be sold, right? And March we have sold us around 20-30% is what we have gone.
I think about that. I think that's my understanding. Yes.
That's right. Right. So whatever you get will be primarily just the profit share. Right. Got it. Secondly, sorry.
Yeah. Go ahead.
Yeah. Rajeev, again, now based on this, we'll probably get a lot of cash flows from this Revlimid opportunity over the years. So would it be a fair understanding that the large part of this cash flows would be used to build a base business, or you will try to capture some other bigger opportunities that you might have in mind?
I think in the near term, I think the way we're looking at this is we're getting good amount of money, and I think that way cash flow wise we're extremely comfortable. I think I'm very happy where things are going. Right now, I think we're doing the low-hanging fruit, which is spending on R&D. So I think our expenses have increased slightly because with the buffers of cash flow that we have had, we are investing in more interesting R&D ideas, more bold ideas. See, my friend, you know that this is going to be there for the next few years, and I think we have something like there are the smaller ones, which are like 5 million, 10 million type of opportunities, and then you have the 100 million, 200 million type of opportunities. The idea here is that you build about, I think a few minutes ago I spoke about, 3 first to 5. Those are like, obviously are smaller opportunities, but you need to build that one big jackpot. And I think going forward in the next 10 years, I think at least I have visibility for 5 to 6 years where we have these big jackpots. We need to fill, at least I want to pull off another 2-3 rev limits if all goes well. So I think that's where we want to spend our money on in the near term. And we'll take it from there. Regarding the acquisition, we're looking at it, but my sense is, again, I subject myself to look at what deals are available. We're looking at both domestic and export, and I think we're very clear that we want to do one large acquisition. I think which will strengthen the base business. I think that's what we're looking at, and plays into the strategic interest of the company. What that acquisition is, when we'll do it, I don't know. I think we don't have clarity, but I think we have the money, I think we can always do it. And I think we just have to find the right asset. And I think we have time. I think hopefully in a few months we'll be able to find something. Yeah.
So basically what you're saying is, the base business would be built primarily on the inorganic acquisition and not organically.
Organic, we are doing what we can do in the organic.
Yeah, on the smaller front, whatever you are doing, like in terms of agro and all that stuff. But the larger form, like for example, we have acquired the US front end as well some time back.
Yeah.
Right.
So I think these are all the most obvious ones, right? Because we do a lot of work in the US, and it makes sense to just buy the front end in the US because then we can plug in and launch our own products. See, the thing you need to understand overall generic business today, and I think if you look at most generic businesses are not growing. It's extremely competitive, right? And the only way you can do something disruptive is you need to buy it. Otherwise, you're not going to get growth. And this is the elephant in the room. So my sense is that we'll find something. I think that's what we're looking at. So So to answer your question specifically on what do you want to do with the cash, I would say 2 things. One is spend on R&D. 2 is look for an acquisition.
Right.
To strengthen the business. Yeah. Thank you, guys.
I'll get back into the queue for further questions.
Next question.
Thank you.
Thank you. We take the next question from the line of Sandeep from East Lane Capital. Please go ahead.
Yeah. Hi, Rajiv. A couple of questions. First is if you could just talk broadly on the Revlimid market formation. There are 10 players, but each one has a staggered entry. So this opportunity should be with you till FY25, 26. Would that be a correct understanding? And related to that is the range of outcomes, because if the price discounting can be various outcomes, can the range of outcome of cash flow for you over these 3.5 years be very wide, depending on the discounts? Just broadly, if you can just put the framework for us.
I think that's my understanding, Sandeep, that I think everybody's coming in a staggered way, and I think there should be a meaningful amount of money that we're going to make over the next 3-4 years, depending on how people enter. I think that's my understanding. I think that's absolutely correct. And the erosion and all, it's hard to speculate. I think it will be very premature to talk about how market will form over the next few years. I think we just have to see. But my instinctive sense is that I think we should do well in the next few years. I think that's all I can say at this time.
The reason I asked is that if there is limited entry for everybody, what's the incentive to discount massively and kill the whole market? You can't get more volumes.
I think we'll all make meaningful money. I think that's the best way I can answer that question.
Understood. The second question is on Copaxone. What is this latest process patent issue which has arisen on Mylan and yourself? How damaging could it be, or what is exactly going on?
I think Momenta sued us. I think it's very premature to say anything at this time. We believe it's a very frivolous lawsuit, and I think anyway, it's the legal matter, so it would be unfair for me to say anything or characterize it. I think we believe it's a frivolous case, and I think, as you know, we've been in the market for more than 5-6 years, think the patents that we've been sued for, I think, are, if I recollect, 2009 or 2010. But as you're aware, we've been making glatiramer for much before that, and our licensing deal with Mylan was also much before that, and we already so it's all in public domain. So what I'm saying, so I believe it's frivolous, but anyway, I think we have to deal with what we have to deal with. So I think we'll see how it goes.
And lastly, if you could just comment on Afinitor, how big an opportunity can that be already in the market, or how to think about that opportunity for NATCO?
Afinitor is doing very well for us, Sandeep. I think I'm very happy with how Afinitor is doing. I think Afinitor is what is driving our export on our base business. In our base business, I think Afinitor probably represents almost 30% of our sales. So I think it's doing extremely well, and we're very happy with how things are. I think we have a generic in US, we have a generic in Brazil. We're the sole generic in Brazil so far, which is a very good situation to be. And US also, I think we're doing well. We have a reasonable market share. We're expecting approval in Canada on this product. So we've done very well on this product. So I think we're very happy how things are. Yeah.
Fair enough. Thank you so much, Rajiv.
Right, thanks.
Thank you. We take the next question from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Hi, Rajiv. Just to circle back to the earlier participant's question, given that glatiramer has been in the market for the time that it's been, what possible outcome would you believe that the plaintiff is looking at to come up with a suit at this point of time? I mean, just a little confused when this came up.
I know. Even I'm also confused. So I don't want to speculate. I don't know. I think we'll stick to what we have said earlier. I think we believe it's frivolous, and I think and anyway we have to deal with it, so we'll deal with it.
Got it. Generally, I mean, the way this business is formed, what I understand is the legal intricacies, the outcome of it is actually with the marketing partner, and in a lot of ways you are hedged. So would that be the right way to look at this as well?
At this time, it's premature to talk about it. Obviously, Mylan will handle, Viatris will handle the legal aspect of it, and I think I don't want to speculate this time. I think things progress, and I think we'll give you more clarity on where we are. Yeah?
Sure. Just coming on to Dash, I mean, what kind of investments are you looking at to build this business or to carry it on from where you've picked it up from? And typically, it does seem like it is a generic front end now. So this business would generally not require any field force. So really, what is the value that this front end gets? Because one would understand having a front end where you have to go out and meet prescribers and get prescriptions, but just wanted to understand the value of this and the kind of investments that this would entail.
Sure. I think we have the Para IV pipeline. So all the Para IV pipeline that NATCO is making will be sold through Dash. I think that's what we're trying to do. So that investment is ongoing, and that investment is reflected in the NATCO standalone balance sheet. Okay. Regarding Dash, I think at this time we bought it, and I think operationally we're losing money. That's the major sub that we're losing money. So I think in the quarter, I think we lost last quarter, this March quarter, I think we lost about 5-6 crores. So I think that's the bleed that we're having on the setup. The idea is I think we're going to have some launches from our India pipeline that we're looking to launch. Hopefully in the next 1.5 years we'll be able to break even. See, at a strategic level, I think US is going through it's a very hard time. Nobody's making money in the US. So the idea now is that just to keep the money, take this business from, let's say we acquired this as 17-18 million business, take this business to about 30-35 million, keep it stable, and wait for one of our jackpots to come, and then and launch those jackpots through this entity. I think that's what we're looking at. Don't take a 1 year, 2 year view on this business. I think we're taking a 7 to 8 year view on this business. And a lot of the Para IVs that we have, and they'll all come to fruition in the next 6-7 years. And here we get to keep 100% of the economics. I mean, I think that's the value proposition of the asset. But in the near term, it's not going to grow dramatically. I think we just want to set the house in order and make sure that we're not losing money. And then get NATCO name out in the market and have a reasonable basket so we have the relationship with the customers. And as you said, it doesn't require so much expense in terms of marketing. It's a straightforward setup. Yeah, you're absolutely right. Yeah. Thank you.
Thank you.
Thank you. We take the next question from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah. Hi. Good afternoon. Thanks for the opportunity. Sorry, good morning. 3 questions. One is just to understand this profit sharing which we have booked when there is actual sales which we have done, right?
That's correct, yes. Absolutely correct, yes.
Okay, so in this, there is no product sale this quarter. So this quarter revenue, when it's 465, there is no product sale. It's completely only profit share from revenue.
Yeah, that's correct. Yeah, that's correct. Yeah.
Okay. So, okay, and secondly, on Revlimid Canada, I think you've given a good idea now, and we've been in the market for now like almost 4 or 5 months. How are you looking at this opportunity in terms of sustainability, and can it be materially different from what we had anticipated? And continuing on Revlimid Australia, we were looking at an opportunity, and I think we had filed for a settlement there as well. But what I understand, that settlement was turned down. So are you still looking at Revlimid Australia launch, or how's the status there?
I think Australia we'll start with Canada. I think Canada is our own front end and we're doing extremely well. And as I said, we have very good market share and that is helping, contributing to our Concall, our subs. It's one of the most profitable subs that we have. Regarding Australia, I think, we are working with our partner Juno, so we don't have direct presence in Australia. So they're handling the regulatory aspect of things. So we have approval for both pomalidomide and lenalidomide in Australia. So we're looking to launch. Regarding the settlement and all, I think it's too premature to say anything. We are working on it. I think we'll give you clarity once we have clarity on this.
Okay, just one thing, Rajeev. This profit share, like whatever calculations I put in my model, I think this profit share looks too high. So if we consider a 30% share, so. And what I get is like even the regular export business has grown sequentially. So would that be a right conclusion? That sequentially adjusting for that 100 crores which we got in Q3, if I adjust and look at the numbers, it looks like the regular business of Afinitor, Copaxone and all has actually grown. Would that be right?
Those businesses have also grown. Yes, absolutely. I think, as I said, again, we don't want to give up too much strategy, and I think you can make your own conclusions. I can't answer the question directly the way you would want, but I think the base business does about in that 50 to 60 crore PAT range, and everything else on the top is what you're getting from here. And I think we're recognizing revenue based on how things go. So I think that's how you want to look at it.
Sure, thanks. I'll come back.
Thank you. Next caller, please.
Thank you. We take the next question from the line of Sameer Shah from ValueQuest. Please go ahead.
Yeah, hi, morning. Just one question. What composes this trade receivables as well as inventory? Still, it seems to be a little high.
I think it is high, and I think what we have decided is, my personal view is this. I think we looked at our inventory. I think a lot of it was COVID, and we had other non-moving inventory. I think our point was just take the write-off and just go forward. And I think there's no point carrying and hanging on to these things. So I think that's why we took a call of writing everything off. And I took a very conservative view. Again, I'm not saying that all of the stock will be. It's not really zero. I mean, you can always, if you sell some of it, you can always write it back. But I just thought it's better just to remove the hangover of the COVID inventory and then just go forward. I think that's. And I said we have also ascertained but this is the risk that we have, and then we just removed it. And I think the other gentleman asked me about what other risks we have, and then we also articulated that we have risk. So going into next year, I only want to carry the agro risk. I don't want to carry anything else in the inventory. I think that's why, to bring clarity for the investors, I think we thought it just go forward.
Right. But so my question is, this inventory, say last year was 800 crores, it's still 760 crores. Receivables have gone up from 400 to 600. So in fact, even after writing off, the number, absolute number is still very high on the balance sheet.
I think, basically two things. The cash flow has come through, okay? This is more, as you know, most of the receivables, a good portion of it has already come through, so there's no issue there. In terms of inventory and all, what we have done, with ours is a very unique business. If all the inventory that you see, I think remove the agro portion where we're not having much revenue. So then the inventory is fairly normal. And also if you look at our business, it's a very niche, limited business. And we are the only one who will say very clearly, I can say this, I have no issues dealing with, the future 12 months. I have no issues in terms of inventory costs. I have no issue in terms of logistics. Because we keep, all our key products, we keep 8 to 12 months of inventory, post-COVID that we have done. And I think we're able to service the demand on a lot of our products very comfortably because we have planned everything 8 to 12 months ahead. Because the margin that we make is much higher. I think that's what we have done. I think probably I'll be the only one who's going to give a guidance saying that I'm not worried about, what's going to happen in the next 12 months in terms of, supply chain challenges or China COVID issues and all. I think we have covered everything. And I think that way, that's why we have the buffer of the, all our products. I think we have always planned ahead. And the reason we do that also is because of the return that we make, because we don't make 20-30% return. I think whether we end up with 10-20% return, it's a market formation thing. But when we target the jackpot. And I think that's the reason why our inventory is always a little high. But again, we are also trying to be more prudent and try to bring down the inventory position, I think, so that we are more in line with the industry, but definitely a little bit higher than the industry.
Right. And in the next 12 months, what investments are planned, either people or capex or anything, any kind of?
Capex and all is not required. Yeah, we are very comfortable. I think we have built enough capacity, and we have a lot of capacity for domestic. We have a lot of capacity for in our regulated market. We have 2 plants for US. So that way, we are not. There's no dearth of capacity. I think what we want to invest, as I said earlier, was a little bit in R&D just to enhance our pipeline because we're having extra cash, and then look for an acquisition. But otherwise, nothing else.
Sure. Thank you. Thank you so
much. Thank you. We take the next question from the line of Tanish Mistry from Investor First Advisors. Please go ahead.
Hello. Good afternoon, and thank you for the call. I had just 2 questions. The first is that, Rajiv, you talked about some time ago that how you're looking at the domestic business growing at 10-12%. So is that essentially so do you feel that the pricing pressure is done in the domestic onco piece, and now from here on, some of it will be also driven by our gastro and cardio business? That's question number 1. And question number 2 is that on the agrichem piece, you mentioned that the roll-off of the patent is in July. So I understand there is a court case, but if the patent's rolling off from a very, from a very common man kind of perspective, do we still need to wait for a court order to go ahead and launch with our product? That's it from my end. Thank you.
Okay. Let me answer your question on CTPR. I think, so I tell you what, so just to give you a perspective, so basically what has happened is we got sued for the compound patent. We have argued that the compound patent is not valid. We couldn't, win that decision. So essentially what the court said was that you can't launch the product till August of 2022. So that was what the decision was. But you should also understand CTPR has multiple patents, and so among the multiple patents, there's another particular patent which expires in 2025. Okay, and our process innovator has been aware, and our process patent has been in public domain all these years. If I remember correctly, I think our process patent has been in the public domain for the last 3 years. It's been published. we find it very surprising that he's litigating us exactly 2 months before launch on the process patent. But obviously, I think if it's up later, I think again I don't want to judge why he's doing it, but I think it's unfair. He had our process patent has been around all along. He's aware of the fact that we want to launch this product in 22. I think he's been aware of it for 3 years. We've been crying hoarse every day saying that we want to launch this product, so he's aware of it. So we'll see, I think, and we also believe that our process patent is non-infringing, but again, the court has to adjudicate. So let's wait. I think the next date of hearing is in July. Let's see how it plays out. And I think once we get clarity in the court decision, I think we can, look at it. And as I said, it's still an opportunity, right? I mean, if you're able to clear the way, I would believe we'll be in the first wave. Everybody assumed that there'll be multiple generics in August. Now, because of the amount of litigation that, FMC is doing, it's very clear that there'll be only limited competition, and we are one of the most forefront litigator in trying to clear the way. I think it's a very interesting opportunity. I think once we get clarity, I think you'll see that it will be a very interesting opportunity. And not far away. We'll hear from you'll hear what will pan out in the next 2 months. And this is what we do. This is what we do. We look for jackpot opportunities and go after them. And there's going to be uncertainty always. I never will shy away from saying that. But this is what we do. But when we deliver big. I think that's how we look at it. Yeah.
Understood.
Okay.
And the domestic one, the domestic piece?
Domestic piece, I think the domestic piece, when I say 400, I'm talking about the base domestic for human formulation. I'm not talking about agro. I think we're not mixing them up. Agro is something
just the
driven by this particular product.
Yeah.
Okay. Thank you. Next question, please.
Yeah.
Thank you. We take the next question from the line of Mr. Rajat P. from iThought. Please go ahead.
Hi, thanks for the opportunity. Sir, you mentioned that our base business PAT is 50 to 60 crores. So if we look at our annual PBT this year, adjusting for the write-offs, we did somewhere around 500 crores. So I'm a little confused. What is the base business profits here in that?
I've answered your question, my friend. I said what I already answered that question.
I'm saying I did not understand out of this 500 crores of PBT in this year, how much is the base business?
I answered the question. I already answered your question. I said 50 to 60 is the base business per quarter. I think that's what you need to look at. I think about
per quarter is what you are saying. Understood. And so second question is around Revlimid. Have we been able to take the maximum permissible market share in the 1 month of sales that we did?
No, I've answered that question too. I think we have started off. I think most of the stock will be sold in this financial year.
Okay, so basically whatever volume limits that we have to operate in on an annual basis, it can happen that in some of the quarters we can sell less volumes, and in some of the quarters we can sell more, so that on an annual basis it comes to that limit that we have.
Absolutely correct. Yeah, absolutely correct. I think about what I said. I think one of the gentlemen asked. I forget who asked. I think a good quantity will be sold in Q1, and there'll be some quantity in Q2 and Q3. Again, Q4 will be better. Huh? Okay. Right.
Okay, sir. Thank you.
Thank you. Next person, please. Next question, please.
Thank you. We take the next question from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for the question again. Rajiv, just 2 clarifications. One is on the 3 products that first of all that you've done, in line with your own front-ending strategy. Are all of these now on your 100% your own, or these are again partnered out?
Ladies and gentlemen, please be connected. Line for the management is dropped. I'll connect them back.
Hello, is Rajiv here?
Connected. Go ahead. Nitin Agarwal is on queue.
Yeah, Nitin, go ahead with your question. I'm sorry, we got dropped out here.
No, I was just saying, on the 3 products that you filed this year, these are again partnered out, or now this is in this case, you've chosen to keep them on your own for your own front end?
Okay. Of the three that I've said, so one was semaglutide. Semaglutide we are partnered out, and the other two, aclaabrutinib and idalis, we kept for ourselves.
Okay. And secondly, on the India business, so for now, our primary bulk of our sales are essentially coming from oncology. How are the other? I mean, has there been any positive movement on the cardiac diabetes piece this year? And what opportunities do you see next year for them?
I think we're doing well, Nitin. I think we had a very good brand of Apixaban, so I think we've done well. It is, Apixaban is doing extremely well. I think we have a run rate of about 2.5-3 crores a quarter on that brand on the secondary. So the brand has done well. This is probably one of the bigger achievements. So this is the generic version of Eliquis. So this has been one. So we have some new ideas. I think we are launching some more products in the next. I believe it will be a stable, good business. But I also said that we need to expand our portfolio. I think we don't have that benefit of doing a large multi-portfolio, diversified portfolio like our other bigger peers. But I think we're working on it. I think, as I said, we have to look at an acquisition and also organically look at things to grow. But we are positive that this business should do well.
And last thing on the agrochemical business, after CTPR, is there another? Do you have a filing portfolio there in the business?
Yes, we have very interesting products. I think we'll file them in the next 12 months. They're all very interesting. But CTPR is obviously the biggest one, but they're all very smart, interesting filings. Some of them are interesting technologies, and some of them are interesting patent challenges. We will articulate as and when we file. I don't want to reveal the pipeline, but definitely you'll hear about it in the next 12 months. Yeah.
And this would be what, again, to start with an India-focused play, or are you looking at doing overseas businesses also on the agrochemical piece?
I think as of now, we're focusing on India. I think that's where the real opportunity is. I think we are taking the B2C approach. We want to go to consumer directly, and I think that's where the real value is.
Okay. Thank you.
Thank you. Thanks. Next person, please.
Thank you. We take the next question from the line of Kartik Mehta from. Please go ahead.
Hello. Yeah, hi. I just had two questions here. One is Revlimid in the US. So in the event that COVID wave is just not there, is there any outlook on your existing products or the products that you will get approved this year? Second question is there any element of higher or non-recurring element in the other expenses after the inventory also, because on a YOY it's almost double? Thank you.
Yeah, sure. I think I'll answer that question. I'll start with the expenses. I think what we've done is 100 has become 200, and I think about 40 is the ECL provision, but 50-60 is additional R&D that we have done. So I think with the surplus that we are having, we are spending on R&D. And I think that's the reason why you see it. And I think depending on which project we're doing, you're going to see a little bit of extra R&D expensing than normal that we're doing because of the surplus that we have. And the first question that we have is what else we have this year. I think we have a few other launches. We have another smaller product for which we're going to get 180 days. We're going to launch soon. We'll announce shortly. So we have another big launch coming up. These are also going to add to strength.
You're talking about FY23, or is it?
In this financial year, that's correct. Yes.
Yeah, and just on this R&D. So what should we look at normalized R&D in terms of you? I mean, so while there is an accelerated effort as you get more revenues from Revlimid, but as a ballpark number, will it be times 4 what you did here, or because see that number on a quarter-on-quarter basis would be in a way an outcome in the way in which you feel that you want to accelerate any of the existing process. So can you help us on that?
I think there will be an increase. How much that increase and all, and which quarter it will reflect how and all depends on when the expenditure will kick in. There will definitely be an increase. Ask me how much an increase is. I don't have an answer right now, Kartik. I think let me come prepared with that answer.
Broadly, this will be.
But how much more and all? We're not done. Let me do because you're asking me, I'm not prepared for that answer. So I'll come prepared next time and answer that question. Yeah.
No. So broadly, will that expense be into product filings, or will it be? I mean, is it a mix of product filing and litigation, or is it for India anything?
The extra expenses will be characterized in three categories, Karthik. It will be one in bioequivalence studies or clinical studies.
Okay.
Two in or clinical studies, and second thing is litigation expenses, and three is raw material expense because of the exhibit batch write-off. Essentially, those three is what drives the R&D. So our exhibit batch write-off will be reflected in consumption. Legal and clinical and bioequivalence expenses will be reflected in, and R&D expense will be reflected in other expenses. I think that's how it works.
Lastly, this will be for products which will come at least after 3-4 years, right? Is it fair to assume?
See, as I said earlier, I think you need to build the next pipeline. No? So in addition to Imbruvica and Revlimid and Copaxone, you need another 3-4 jackpots. I think, but unless you spend meaningful amount of money, you'll not get. And you won't get by doing 5 crores, 10 crores. You have to spend sometimes, like semaglutide, we had to spend more than 100 to get an outcome on that. But see, the thing is, but again, there we played a little conservatively by out-licensing that product. But the really good ones, you will spend big money. I think it doesn't come cheap. But again, big money also means big returns as well. Not all the time. Sometimes. So, but unless you gamble and spend that sort of money, you're not going to get anything meaningful.
Okay.
Thank you, Karthik.
Thanks.
Yeah, right.
Thank you.
This will be my last question, yeah? Thank you.
Sure. We'll take the last question from the line of Mr. Ravi Purve. Go ahead.
Yeah, hi. Thanks for taking my question. Most of the questions have been answered. Just one doubt that I have, Rajiv. I think you had mentioned about base business profits being, 50-60 crores. Are you referring to base business both India as well as the overseas base business, not including Revlimid?
I'm excluding, when I say base business, I'm including the subsidiaries and in India.
Yeah, so subsidiary meaning, so both overseas subsidiaries as well as India, both domestic as well as India export business, right?
Exactly. That's correct.
Okay. So just, I think, we've mentioned during the call that, a lot of our newer products have been very successful and we are quite happy with their performance like Afinitor and all. So, and if I look at our performance, let's say 3 years back or 4 years back, right? So in a sense, is there a case to kind of understand that a large part of the profits of the, previous, few years or the products which are still kind of continuing to contribute on revenues, be it Tamiflu or Copaxone or, domestic onco, the profit margins of those businesses have dramatically reduced over the last 2 years in the sense that, would it be fair to assume that the profit margins have halved in those businesses for us and they've kind of, in a sense, commoditized to a large extent, and it is the Afinitors or, let's say now Revlimid and Revlimid Canada, which is kind of, replacing that lost profit in a sense?
You need to understand how generic business works. I think if you look at the export generic business, it's everything that you do will keep reducing every year by 10, 15, 20%. So let's say what you made in 2017, 2018, if you were to look at the numbers today, there will be a 50% collapse in that business.
Right.
So essentially, it's a treadmill, no? So you need to keep coming and launching new products and replacing what you're losing on your base business. That's the nature of the beast. I mean, there's no other way of looking at this. And I think you just have to keep coming up with a new idea. I think if you look at the last 6-7 years, we always had one special idea which always took the earnings. I mean, Tamiflu took care of earnings for almost 3-4 years. Copaxone, has been consistent and continues to be consistent. Then we had Hep C, which did extremely well for a few years. So you need to keep coming up with something new every year. And I think, so luckily, we always come up with something every year, which kind of keeps the earnings up. And that's how we have to look at this business. If you take our track record for the last 7-8 years, every year we're able to deliver something or the other, which allows us to keep our, EBITDA at a reasonable number. And that's how this business is. You just have every year you have to keep delivering something. Something good happens, it takes care of earnings for 2-3 years. Again, you need to come up with the next big idea. So, and I think you look at it this way, like earlier our subs were zero. Now subs represent almost 80 to 100 crores of revenue per quarter. So we have actually replaced, 400 crores of sale that we have lost in our base business with the subs, but not at the same level of profitability, because the profitability earlier was on a lower expense base that we have had. Now expenses have gone up, and portfolio is far more competitive than what it is. But that's what it is. I mean, you just have to keep coming up with something new and then hope that it works. I think.
Would you say domestic business has also gone through a similar path this time around, as in the base profitability of the domestic business kind of got cut in half in the last 2 years?
I think our portfolio is very unique. I mean, I have lost profitability, and generally in the industry, things have been more stable. I think I have to admit that, because of the nature of our concentrated portfolio, we have lost. But overall, it's been a very stable earnings again. Domestic is always stable. I think there's no doubt in that. But just because we don't have a large portfolio, we're not seeing the impact of that on our balance sheet. Still, domestic represents only 25% of our sales. Yeah, so it's not like for some of our peers, it represents a larger share and more of their EBITDA compared to my EBITDA. Challenge with domestic is building it is very difficult, but once you build it, it's a reasonable annuity. But overall, if you see, the base portfolio doesn't grow dramatically. You need to understand, when somebody says it grows around 10% or 15%, half of it is coming from the base portfolio growth and half of it is coming from new launches. What we are able to do is new launches, but we're not able to do is get a growth from the base business, because our base is very small. I think that's the difference between, let's say, us and everyone else. And how do you fix it? I mean, the elephant in the room is you have to buy something else. But again, when you're trying to buy a business which grows only at 5-6%, how much are you willing to pay, right? I mean, that's a question that we're always trying to, answer. And I think hopefully I'll be able to find an answer to that question. Yeah.
Okay. Thanks, Rajiv. Good luck. Thank you.
Thank you, everyone. Thank you so much for your question.
Thank you all.
Thanks.
Thank you. This was the last question. Over to the management for their closing comments.
Thank you all again. The questions related to this call will be available after we consolidate all the aspects. Feel free to reach out to us, anything specific to the call. Thank you all. Have a good day. Thanks.
Thank you. On behalf of Edelweiss Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.